Welcome to the Depth Dive. Today, we're really getting into the story of Unimech Aerospace and Manufacturing Limited, UAML for short. They're this precision engineering firm that seems to be, well, making serious waves in some pretty high growth areas. Our plan is to sort of unpack their growth story, look at some maybe surprising facts, and flag the key things you'll want to keep an eye on.
And it really is quite a story. UAML, they're not just your average engineering outfit. They specialize in things like aero tooling, precision components, mechanical assemblies, and they serve these really demanding industries: aerospace, defense, nuclear, even semiconductors.
Right.
But what's really striking is their financial path. I mean, revenues shot up from about 36 crores in FY22 to potentially 243 crores by FY25.
Wow.
Yeah, that's an 88.4% compound annual growth rate. Pretty impressive.
That 88.4%, I mean, that's not just growth, right? It feels like they're really grabbing market share in these tough, specialized sectors, like the market's really buying into what they do.
Exactly. It signals strong validation.
So what's actually driving this acceleration? It seems like the big headline grabber right now is their push into nuclear. Now, for anyone not watching that space super closely, why is that move such a big deal right now?
Well, what's fascinating here is just the sheer scale of it. Yeah. And the long-term view. Look, UAML has already put in bids for over 800 crores worth of nuclear tenders.
800 crores, okay.
Yeah. And this positions them perfectly, really, to cash in on India's big nuclear energy expansion plans.
Mm.
The government's approved those 10 new indigenous 700-megawatt reactors, the PHWRs. Plus, there's this long-term vision aiming for 100 gigawatts of nuclear capacity by 2047. That's a massive runway for growth. Decades long.
Okay, so nuclear is a big future play, but we shouldn't forget their sort of bread and butter, right? Their core aerospace business. How does that fit in?
Oh, absolutely. That's the foundation. UAML is really specialized in aero tooling for the big engine platforms. We're talking LAP, Pratt & Whitney, Rolls-Royce, the giants. And they built this pretty impressive global reach, over 35 customers, 7 countries, exports. That's more than 89% of their revenue.
89%, wow.
Yeah. And if you connect this to the bigger picture, I mean, India is already the third largest aviation market globally. It's seeing like 15% passenger growth year on year. And look at Boeing. They've ramped up their sourcing from India massively, from maybe $250 million a decade ago to over $1.25 billion now. It just shows a huge potential for companies like UAML here, leveraging India's manufacturing strength.
All right, and it's good to hear that all this, aggressive expansion is actually backed by solid financials. You mentioned the strong trajectory, consistent profits, and that 3-year average ROE of 31.3% is, well, pretty impressive. Even CRISIL bumped up their credit outlook to positive after the IPO, right?
Yeah, the IPO is definitely significant. The company's net worth, it's projected to hit around 700 crores by FY26. That gives them a lot of financial elbow room.
Mm-hmm.
And it leads to this really low gearing 0.25 times.
So essentially very little debt compared to their assets or equity.
Exactly. Their debt to equity is tiny. And being that lightly geared isn't just, room to maneuver. It's a real strategic plus. It means they're agile, they can jump on M&A opportunities, fund big capital projects, or just ride out economic bumps much more easily. That's a huge edge in these volatile industries.
Okay, so the picture so far looks, well, undeniably strong, compelling even. But like with any company growing this fast, there have got to be potential headwinds, right? Some turbulence ahead. So what are the key risks we should be thinking about here?
Right, that's the important question. How do they manage this growth sustainably? Well, first, that high export dependence, over 89%, remember, that makes them pretty vulnerable to trade issues. Potential tariffs, maybe 15-20%, that could hit margins directly.
Yeah, that's a big if given their global sales.
It is. Second, customer concentration. Even though they've added more customers, they still get over 85% of the revenue from just 3 big ones. That's always a risk. Third, this kind of business eats up working capital. Their gross current asset cycle is around 200 days.
Meaning it takes about 200 days to get cash back from investments in inventory and what customers owe them.
Precisely. And it's expected to stay pretty high, maybe 150, 160 days, especially with these new nuclear projects coming online. Managing that cash flow is crucial. And finally, look at the valuation. A PE ratio of 66.4 times earnings, price to book over 8. That's way above industry averages.
Okay, so the market is basically saying, we expect you to keep hitting home runs.
You got it. Very high growth expectations are already baked into that price.
Mm.
It demands, well, absolutely flawless execution going forward. No room for error, really.
So summing it up then, UAML is clearly a company with exceptional growth, really ambitious plans, especially tapping into nuclear while building on that aerospace core. But, like you said, that high valuation and the big strategic moves, they definitely come with significant execution risks attached.
Absolutely. So for you, the listener, it really becomes a balancing act. You have to weigh these really compelling opportunities, aerospace, nuclear, against that critical need for them to execute perfectly.
Mm.
Especially, managing those potential tariffs, diversifying the customer base, and keeping a tight rein on working capital.
So here's a final thought to chew on. Given those ambitious targets and the market's sky-high expectations, how closely would you be watching their progress on winning those nuclear bids? And maybe just as crucial, how well are they actually utilizing their capacity as they try to scale up so fast?